Welcome back. We are watching oil this morning. Prices climbing as a new report from OPEC shows production fell sharply last month. Earlier this week, I sat down with the CEO of ConocoPhillips. Ryan Lance was here in an exclusive interview. He weighed in on the production across the world, including the U.S.
We look back and it's a well-supplied world. The U.S. is growing dramatically in terms of the technology that's coming to these unconventional plays in North America. That's driven a lot of supply back into the market. OPEC did cut back, and then they opened back up a little bit when the Iranian sanctions were put in place, but then some exceptions were put into the sanctions, so the oil come out of Iran stayed in the marketplace a little bit longer than people expected, so that drove an oversupply. Inventory started to rise back again, then prices started to fall to accommodate that.
Joining us right now, Lipow Oil Associates President Andy Lipow. Good to see you, Andy. Thanks so much for joining us. Assess the situation for us on the supply-demand level for oil right now. Where do you see things?
Well, where I see things is we're currently oversupplied, and OPEC and non-OPEC producers are doing their best in order to rein in that oversupply situation. There's nothing that they can do about U.S. shale production, which is about to exceed 12 million barrels a day. But you can see from their actions, not only from what you just mentioned about cutting production in December, but the fact that they're having meetings in March and April and June shows how much they're concerned about prices and the supply-demand balance.
Andy, Lindsay Bell here. And in the meantime, you have the IEA out there saying the U.S. is going to reinforce its leadership position in the production of oil again this year. So how does the U.S.'s position in the oil market influence the global oil market now? Are they going to have to consider price or production cuts going forward at all?
Well, the U.S. producers are certainly sensitive to price, and you can see that in the week-to-week rig count as well as the capital budgets that are being cut for 2019. The good news is that as the U.S. adds more supply, what you're seeing is that additional volume is being exported along the Gulf Coast as we add more infrastructure, and that tends to tamp down oil prices around the world because now we're connected. We're shipping our oil to China, Taiwan, South Korea, Europe, all over the world. So we are now connected and impacting prices.
Andy, it's Dagan McDowell. We did a story about Ford is now going to be has its eye on making an electric F-150 pickup truck. Long run, what impact do electric vehicles have on demand in the United States in particular?
Well, on a long-term basis, and I'm talking 2030 and beyond that, we are going to see electric cars displace fossil fuel use, and of course that is going to dampen demand for oil as well. But around the world, we still have oil demand rising, and that's kind of the offset on prices.
Mm-hmm. All right, we will leave it there. Andy, it's good to see you this morning. Thanks so much.
Thanks for having me back.
Andy Lipow joining us there.